This is Andrew Stotz of Stotz Investment Research, looking at world-class benchmarking for the company WH Group Limited, listed in Hong Kong. Let's go through some of the background on this company. WH Group Limited is the world's top pork producer or processor by volume. It also makes and sells fresh pork, bacon, ham, sausage, and other packaged meat products. The company produces and markets the majority of its meat products in the US and China, and also sells into the major markets of Europe. The ticker code in Hong Kong is 288. We'll call it WH. It's got a market capitalization of almost 13 billion US dollars and an average daily turnover of 28 million. So it's a large cap stock. The beta is 0.4. It's in this consumer staples sector, and the industry is food and beverage and tobacco. Let's look a little bit at what's going on with the company. So, WH Group is the world's largest pork producer. Just over half of its revenue and nearly all its profits is derived from packaged meat, including bacon, sausage, and ham, while the rest is mainly fresh meat. It's involved in the entire pork chain, including hog production, which accounts for 3% of sales. Its Chinese subsidiary, Shuanghui Development, is Asia's largest animal protein company by production capacity. Smithfield, its U.S. subsidiary, is the U.S.'s largest pork producer, and its European arm, Campofrio, is Europe's largest packaged meat producer. My God, these guys are large. Now, in 2015, it produced 19 million hogs, of which 16 million were in the U.S. A total of 48 million hogs were processed for meat, meaning it's sourced from its farmers. WH's total annual production capacity of packaged meat is above 4 million tons. While China is the biggest consumer of pork globally, its pork processing sector is underdeveloped and fragmented, unlike that of the U.S., which is highly efficient. So, WH Group can leverage its size to take market share with its lower-cost pork products in China. Let's take a look at the revenue breakdown by segment as of first half 2016. What we can see is packaged meats was 52%, fresh meats were 44%, and hog production was 3%. Revenue by geography at the same time, first half 2016, 56%. Coming from the US and 37% coming from China, 7% from Europe. So here we have a Chinese company that's clearly successful in the US market. Now, let's look at world-class benchmarking for WH Group. First of all, the chairman is Mr. Long Wan, and he's been chairman since 2010 to present. And recently, he's taken over as CEO, and that happened in October 2013. So now, let's look at that performance. The first performance we can attribute to the prior CEO, Zijun Yang, and that performance went from a number 2 down to a number 10. Pretty bad times at that time. Now, Mr. Long Wan took over, and we attribute his performance for 2015 in the past 12 months. So what we can see is that profitable growth improved in the IPO year of 2014 from worst in 2013. So the company IPO'd in 2014. The company ranks better than 354 of 590 large consumer staple companies. And what we can see is that this number 4 profitable growth ranking that the company has is coming from above average profitability, but growth, which has been volatile but is very high in the past 12 months. Now, if we look at what's going on below that, we can see that sales growth has been relatively poor since 2015. That's the big weakness. But what we can see is that the margin change and the asset utilization are rising, right? And so that's what's driving the performance of this company, asset utilization and the change in margin. Now, so not a bad job, slightly above average at number 4. Do you want to see the profitable growth rank for a company in your portfolio? Well, just leave a comment below with company name and country of listing, and I'll post it if I have it.